Welcome back, and thanks for tuning into Mortgage Minutes. I'm Lisa Theriault, here with mortgage advice that you can trust. Some of you follow me on Facebook and Twitter, and if you don't, you should. I posted a little blurb showing how some clients could save over $1,000 on their monthly cash flow by doing refinance on their mortgage. He asked me for more information, so here we go. Joanne and Roger gave me a call a little about a week ago, and they wanted to discuss the interest rate they were paying on their current mortgage. They had just received my newsletter and my rate updates, and they wondered if there was any way for them to get into today's lower interest rates, even though they still had about a year and a half left on their current mortgage. After finding out the penalty to get out of the current rate, and we did a few calculations, it soon was blatantly obvious to all of us that they could definitely make back that penalty in just a few short months with a lower interest rate, but that we could also increase their cash flow by rolling some higher interest credit card and loan debt that they were carrying. So here's what it looked like. They had a mortgage for $255,000 at 5.39%, a car loan for $12,000, and total credit card balances of about $18,000. The penalty to get out of the mortgage was $3,400, and their total monthly payments on everything was at $2,800. Now, we didn't want to extend their amortization back to the 25-year mark because they'd already paid it down to 18 years, but we were still able to cut the payments down on the entire debt load to $1,722 a month. That's a huge increase on their cash flow and major reduction to their interest costs, but there's more. Joanne and Roger decided they were going to pay every 2 weeks at $861 per payment, and by doing so, they're going to see an additional $5,000 off their balance at maturity and an amortization that's closer to 13 years rather than the 15 years they would have had if they paid monthly. How cool is that? Not only have we increased their cash flow by $1,000 a month, we've also shown them how to pay off their mortgage sooner just by paying every 2 weeks instead of once a month. Now, I'll be discussing how a program called the Inflation Hedge Strategy will save Joanne and Roger even more in part 2 of this episode, so be sure to watch for that one as well. If you or someone you know would like to see how a restructuring like this could increase your cash flow, or if you just have any questions at all about mortgages in general, I encourage you to give us a call. And don't forget, our services are usually free, so reach us at 613-860-1825 or on the web at lisatheriault.com. And for all the latest information on what's happening in the market, be sure to sign up for my free monthly newsletter when you're on the website. You'll find that link right there on the site. As always, I wish you wealth and happiness, and thanks again for tuning in. Until next time.